So today we are going to be live streaming the FOMC Federal Reserve meeting, and it's going to be starting in about 23 minutes. So if you guys are not catching this live, just make sure you guys can fast forward. It's going to be at 11 a.m. my time, so you can look at the top right-hand corner of my timestamp if you're not watching this live and you just want to see how the market reacts. I'm going to be live for a little bit over, the goal is to be live for about an hour. I really hope for those that are tuning on in, the whole idea of this is for us to be able to watch how the market reacts together and what interest rate hike is put in place by the Federal Reserve. Jerome Powell will be speaking today. Jerome Powell is the head of the Federal Reserve, and he will be speaking at 2:30 Eastern time or 11:30 Arizona time, which is about 30 minutes after they actually announce the interest rate hike. He's just going to be answering questions. In my experience, anytime that he answers any questions, it's almost like not giving you a direct answer, but kind of dodging around, and rightfully so. I mean, he doesn't want to say anything that causes more harm than good, right? And it should be an interesting time. As of right now, the market's kind of factoring in a pretty aggressive interest rate hike, and because of that, it's actually going up. They think that by the Federal Reserve taking a more aggressive approach, it could be something that at least can have a positive catalyst to the overall market. In my opinion, one of the things that we've talked about so many times, and I know we talked about it in today's earlier video, is anytime that the market runs up like this, there's set expectation that's being factored in right away. If we don't meet that expectation, then the market can drop significantly. If we do meet that expectation, that it can continue to rise and or plateau at that same area. This is why I talked about, staying cool, calm, and collected with your position. There's a lot of stocks that I'm still invested in long term. Amazon, Apple, Tesla. That does not change regardless of what is shared today. And the main reason I say that is the whole reason that I've taken a smaller position in the very beginning in these long-term plays is because it's still uncertain, right? We still don't know where the bottom is. We still don't know if we've hit the bottom. Market's trying to show signs of a support, but we're not 100% there yet. So instead of trying to predict the bottom of any opportunity, my goal was just to get in at a price point that made sense to me with a position size that I can tolerate even the worst case scenario. And that's always what I like to preach in my videos. I never want you guys to think that I'm here to encourage you to lock in profits or to sell if that wasn't your original intention, right? You should always stay true to what your original intent was. If you focused on day trading, then don't allow that day trade to turn into a swing trade. And if you focused on swing trading and or investing, then regardless of what happens today, just make sure that your position size is something that you can tolerate even at worst case scenario. All right, my body is prepared, Ricky. All right, Raymond, sounds good. I wanted to see if you guys had any questions leading to that Federal Reserve meeting. So is there any questions that you guys might have? In my previous video, I still have my notes over here. To my understanding, there is a 26% chance for a full basis, full interest. Give me 1 second. I just got my new MacBook and it looks like it's already freaking out, or my new iMac. Yeah, that scared the bejeebers out of me. I was like, what the heck? I'm home alone. Oh, that was terrifying. Jesus. Well, here we go. All right. So as of right now, it looks like TQQQ is really beginning to hug this moving average. In my opinion, anytime that we begin to kind of trade sideways leading to that moving average, we're getting ready to pull on back. It 100% does not have to pull on back, especially even if it does pull on back a little bit, and then whatever the Federal Reserve ends up sharing can act as a positive catalyst, and it can return right back to previous levels and or even make new highs. So again, on the technical sides or technical analysis can be a useful way to analyze a stock, but anytime any news, anything fundamental, right? So like this report that's about to come out, doesn't matter what's happening on the technical side, when that report comes out, it goes beyond any indicator. It goes beyond anything, right? So this is why I always talk about, yeah, indicators are to be used as a reference, but never a sole reason on why you should initiate or take a trade. So yeah, scary movie. So I'm setting up over here on my right-hand side the actual Fed meeting. Let's see how many of you guys we have here. So here we go. All right. Looks like we're still a little bit early. We have 18 minutes until the actual report comes out. So I know some of you guys, I have my lunch ready over here. If you guys want to grab a bite to eat or something, or a little snack, we're going to be here for about 45 minutes from start to finish. So please make sure, you can leave this running, go grab your water, go grab your snacks, and then come on back. So didn't this happen last time that we pumped up and then we went down the next day? It's happened 2 times in a row. We pump up about 10% on the day, and then the following day we drop about 10 to 14%. Can I see a show of hands of how many of you guys have been active enough and have experienced the previous 2 interest rate hikes? Do you guys remember that? Do you guys remember the interest rate hikes back in June and May? No? Do you guys remember that the first day the market went up, and then the next day the market dropped about 10 to 14%? Right? Okay. So there was a couple comments in my previous video, and I know they're just trolls, right? But I want you guys, people actually taking time out of your day to understand this. I want you to understand why I talk about position size. Some people think that, what do they call it? They call it FUD, right? Where they think that I'm trying to share scary information. And in my opinion, it's not, right? Because in the past 7 months, we've been selling off. So my job is to look out for the beginner investor, for the beginner trader. So instead of encouraging you, hey, go all in, buy now, buy with every dollar that you have, right? A very similar approach to a lot of these trolls, where they buy and then they just, fingers crossed, they hope that the market goes up. But we know that the market can continue to sell off, which is why I talk about don't be afraid to buy, but also don't put yourself in a position that you can't tolerate if things go south. And that's what I want you to understand out of my videos. My job is always to look out for worst case scenario, while everyone else is focusing on, hey, this is going to skyrocket, this is going to take off. I know that the market's been selling off for such a long time that I really like to encourage and empower people to be patient. That might not be something that you might want to be told. And again, maybe that's a reason maybe not to follow my YouTube channel. But I know that that's one of the biggest challenges that I experienced when I first got started as an investor and as a trader. It was learning the importance of patience, learning the importance of position size. And I really hope that every time that I preach that, and share that within my videos, it's just really trying to take worst case scenario into consideration. And I really hope that, it's something that you understand that is being expressed through my videos. So also known as risk management. Yeah, I wasn't aware that some people viewed risk management as a bad thing. But it just showcases how narrow-minded some people are, right? Some people understand the market, other people hope for things to happen in their favor. And if it doesn't go according to their plan, then guess what? They blame everyone else for their own problems and or the position that they put themselves in. And whose fault is that? Simply themselves, right? So please, all I ever ask you to do is never be afraid to take advantage of an opportunity, but make sure that you do it in a tasteful way, in a way that you can manage even if the worst case scenario were to play out. And I think that's what's most important. So looks like we have a couple of you guys actually beginning to join us. If it's not too much to ask, I know some of you guys get, I don't know if it's asked of you a lot. If you guys can drop a thumbs up on this video, it really lets me know that you guys appreciate these videos. And of course, I would love to continue to make them. I know that Amazon and Apple stock report earnings tomorrow. I was thinking of live streaming that. So I'll kind of leave it up to you guys. Depends on how many likes we get on this video. I just want to make sure enough people show up. And again, I would be more than happy to host that live session after the market closes tomorrow as well. All right. Here we go. So, guys, it's free. Give him a sub and like the video is the least we can do. I appreciate that, Sebastian. Thank you, thank you. It really does mean a lot. I mean, I like seeing you guys enjoy what it is that we create. For some people, they don't understand it. For others, obviously we take a lot of time out of our day to make this happen. So, and just like you guys, right? So I can't believe that you drink Coke. Yeah, and I'm eating chips too. Leave me alone. I haven't had any breakfast or lunch. I've been in front of my screen all day. The creator, I appreciate that. Why don't you include TQQQ in your long-term portfolio? It is included. I just reduced my position size because of the uncertainty of how aggressive the market could pull back due to this interest rate hike. And you have to think, TQQQ, at least in my opinion, it's considered to be of higher risk. It's triple leverage, so therefore for every 1% the NASDAQ drops, TQQQ moves 3 times as much. And because of that, I need to make sure that I take my downside risk into consideration. So, which is why, but yeah, I've had four main plays, 4 main positions that I've been talking about going long on. If you're part of my Learn Plan Profit group, you would have heard about it, a couple months ago. But yeah, TQQQ is definitely included in that. So friendly reminder, we have about 12 minutes until the FOMC Federal Reserve meeting begins. So please make sure that you prepare for that. So if it's not, just because we're going to be here for a little bit and I don't want you to miss out on any of the market's reaction, you could leave this live stream on, go grab a cup of water, go grab something to drink, maybe a snack. I just want to make sure that, we have your attention as the market begins to move when it reacts. All right, I'm trying to read through all of your guys' questions. Let's see. Please say about Meta, I can invest $1,500. So again, friendly reminder, I'm not here to tell you what to invest in. I will never tell you what stock to buy. I will never tell you what stock to sell. I share my opinion. I trade and invest in a specific way. My investing style might be completely different than yours. So you should never ask the question to someone else of what you should do with your money. You should take time, understand how you see value and how you tolerate risk. And that should make up kind of your strategy towards investing and towards trading. If you are just trying to jump into the market, throw money at something and hope that it grows, again, you're just literally setting yourself up for failure. We say this often within our group where, having no plan towards a goal is a plan to fail. And it's as simple as that. Do I think that Meta is undervalued? I mean, it's going to be reporting earnings today after market hours. I believe that there was a big position that someone took. I think it was $1 million short or $1 million put, betting against Facebook, thinking that it's going to drop further than expected. It wouldn't really surprise me, especially with how Snapchat reported earnings. Just overall ad revenue is down for almost every company. I mean, Google is a perfect example. They reported earnings yesterday. Google owns the 2 largest advertisement platforms, known as Google and YouTube. And they also missed their expectation, yet they still ran up, right? It wouldn't be much of a surprise if Meta, because of their focus through the metaverse, is running through money quicker than Google. Google seems to be a little bit more collected with the way that it chooses to run its company. Meta is a little bit more, I would say, of higher risk right now. Do I think that Meta could make a good long-term play? Sure. I mean, it has sold off enough where, it has a lot of margin for potential recovery, right? So, but it's also lost over 50% of its value based off of all-time highs. So the cheap can always get cheaper. You should always understand that. And it's not about predicting the bottom of a stock. It's asking yourself, can you tolerate the time that it will take for that stock to recover? That's a simple question to ask yourself that only you can answer. No one should ever answer that question for you. So Ricky, do you think that TQQQ will go up after market because of Meta? I don't. How am I supposed to know? I don't know. I don't have the earning reports. Why are you asking me questions if I have a crystal ball? Come on, guys. Ask me questions in which I can actually answer. What do I think that, in my opinion, do I think that Meta is going to hit its earnings? No. I think Meta is set to miss its earnings. I think Meta should drop after market hours. That's what I think. And if Meta drops, then the overall market should drop with it due to its market cap. But something that I think is more important is the Federal Reserve meeting that's going to take place in about 8 minutes. I think that's more important. So that I think would have more of an influence if the market rallies or if the market drops due to what is shared in the next couple of minutes. So let me actually just prepare for that. You guys crack me up. How are you asking me questions of what do I think is going to go up? Here, let me look at my crystal. Let me ask the ghost that I just heard right now. Maybe she knows. Oh goodness. Anyone got the link for 7 minutes time? Yeah, so we're gonna be live streaming it here. So I'll post the link. Or give me one quick second. So I'm gonna pull it up just so you guys can see it through my screen as well. Sound good? So we have it here. One second. Here it goes. We're still consolidating on TQQQ. Federal Reserve meeting starts in just a bit. Okay. So again, we're waiting for it to start. I also have this when they announce this should catch the market's reaction towards just so we can see it happen when it does, the FOMC rate decision. So we have expected 2.375, prior is 1.625. So we'll see what we actually end up reporting today. So we have it all ready. Again, once they do go live, we're going to be broadcasting it here on the channel. So don't worry, we have you guys covered. What do you guys think? I should probably just ask you guys just for the sake of it. What do you think is going to happen with interest rate hikes? Do you think that it's going to be 0.75 or 1 point? Is it going to be 1 full point or 0.75? I want to see in the live chat. So if you want to participate, feel free to comment in the live chat. What do you think is going to happen? I say 0.75. Okay. Wow, you guys are active. You guys are full of energy today. I like it. It's a good day to have energy. What? Okay. Now you guys are making up your own percentage point. I like it. All right. No rate hike. Oh, that's a good one. I should have asked that one. No rate hike. All right, here we go. Getting a little bit closer. All right, wanted to set this thing up so we can see where the market and how the market is reacting. All right. Let's go ahead and I'm going to get this set up over here. I'm going to bring this over. What do you guys think about this setup? Is this okay? So we have both some of these charts over here, just to make it look a little bit better. All right, so we have Meta on the down on the bottom chart. We have TQQQ, which is the NASDAQ ETF. So if this thing goes down, that's not good for the overall market. So just so it sits a little bit prettier so we can see everything there. Does that look okay for you guys? I just want to make sure you guys all approve. You guys are the boss here. I bet puts won't pay. That's a good one. I mean, definitely. I mean, market's bullish, right? It's just, and it wouldn't even surprise me that even after the interest rate hike, we could go up a little bit. But it's always the day after that we see a huge red day. I almost want to say it's 3 federal FOMC meetings in a row where it's the day after that there is a huge sell-off. We just asked that question a little bit earlier today, and it's been a very unfortunate scenario for, the past 3 months. So I know Jerome Powell is going to be speaking in, in about 30 minutes, but there should be a reaction and or at least a release in just in 1 minute. So it should be now. Let's see. See which way we're going. All right, there it goes. Market's reacting in a positive way. Check that out. Market's reacting in a positive way. We got TQQQ rising. We have Meta rising right now. Let's see which way we go. Oh, here we go. We're going south. There it goes, going. Pick a side. Market, pick a side. What do you guys think? They raised 1 point? No way. Let's see. That is not good. No way they did. Let them. Oh, here it goes, fade. Actual 2.375. Nope. Yeah, no, it's raised 0.75. It's raised 0.75. Expectation 2.375. Result 2.375. It's what's been factored into the market, so that shouldn't surprise the market by any means. Let's see if the market actually ends up reacting in a positive way. I think that would be actually pretty interesting. Here it goes. I'll make this a little bit bigger so you guys can see it. No. There it goes, reacting in a positive way. We're at 29.60. Let's see if some momentum begins to pick up. Okay, nothing's happening. Yeah, I mean, again, it's what the market was factoring in. A lot of people were asking the question, why was the market going up? There it goes. It's beginning to pick up. Going back up. Let's see where we're at. Here it goes, going green. Let's be careful. We're approaching previous or intraday all-time high at 29.77. We're waiting for this to start. VIX is dropping. Yep, less fear in the market. VIX should be dropping. I like that. Is 0.75 bad? No, I would say it's first off, it's what the market expected, what the market was factoring in. Remember, we made an earlier video today. I like to look at what the market is factoring in into our market, right? So there was a 26% chance, according to the market, that they can go for a full basis point rate hike. But there it goes. We just made new highs on TQQQ. We also have Meta making new highs. Check that out. So they actually increased interest rates exactly what they expected, which was that 74% probability of them raising at 0.75%. Thank you so much, Ricky. The precise call out helped me. And again, friendly reminder, I mean, I didn't call anything out, right? And this is one thing that I want you guys to know. First off, I'm never right 100% of the time. Surprise, surprise, right? Second, my video was not a call out. My video was making you aware of what the market was sharing. But one of the biggest challenges I know when I first got started as a beginner investor or beginner trader is that it was very difficult for me to either find this information, and it was also very difficult for me to understand this information. So that's what my job here on this YouTube channel is. It's just to make you guys aware of what the market is saying and how to articulate it in a very simplistic way. I hope it's not too much to ask. I hope that I earned your thumbs up in this live stream. I'm going to continue to go live because Jerome Powell in 26 minutes is going to be speaking. You guys, it's boring, but the market can react after he begins speaking. Probably not, and I'm making you guys aware of this. Probably not. I don't want to waste your time and then say, hey, you guys need to stay on. Probably not, but just in case something does end up happening, I want to make sure that I am live and that I can capture it. And if you want to stay, I would love to have you here. So there it goes. Pulling on back just a little bit. So honestly, the market's not reacting in not in too of a negative way, but it's beginning to pull on back. Where are we at with likes? We're at 1,000. We have 7,000 of you guys here, and we have 1,000 likes. If it's not, maybe I'll even do like a free flag giveaway or something like that. It's up to you guys. I'll leave it up to you guys. But if you guys can drop a thumbs up, especially I was thinking of live streaming the Amazon and Apple earnings tomorrow and how the market reacts. I would love to have you guys here. Please make sure that you subscribe to the channel, turn on your post notifications, and then also, if it's not too much to ask, I'd really appreciate you to drop a thumbs up. Again, I love hosting these live streams, and I really hope that you appreciate them as well. Yeah, I was like, as long as I can get half the amount of people here. Be careful here. So we have TQQQ testing moving average support. If we break below this, this is actually not a good sign for TQQQ. So we are testing the support level right around that moving average. If we continue to break below this, this could be a really bad sign for TQQQ, which means that if TQQQ begins to drop, then most likely every other tech stock is going to follow as well. And this is leading up to that Federal Reserve meeting. So please make sure that you're aware. There it goes. We're breaking below previous support. This is not a good sign. All right, here it goes. Here comes the selling pressure. So again, this is why I talked about having a very light position size. Sometimes And I'm telling you this in my experience. Sometimes I don't understand why the market reacts the way that it does. Why did we push up to highs of 29.87? Was hype present? Was there just a lot of buying pressure? And then it peaks. And then just like anything, after it peaks, it begins to dump. And then the true momentum begins to follow. And that's kind of what it looks like is going on right now. So we'll see if we actually form a support level here. But one of the things that I talked about is please, please, please watch your position size. Right now is not a time to be super confident. It's not a time to be super aggressive, at least not in my opinion, because market direction continues to change. The past 3 days, we were bearish, right? This is why we were shorting the market. Today, we are bullish. All of last week, pretty much, except for Friday, we were bullish. The market continues to change. So understand that right now, especially as a trader, your job should be to be selective. Watch that position size and never be afraid to stay cash. There's a common saying within our Learn Plan Profit group, and it's the idea of, sometimes the best position is no position. I don't know if you've ever felt that way, but sometimes when market direction is so unclear, when the market is so choppy, when it's so volatile, sometimes it's not even worth being in that because of the roller coaster of emotions, right? So just, again, do not put yourself in a position in which you cannot tolerate. Hit that like button, guys. We're keep providing free content. I appreciate that, man. I really do. Here it goes, making new lows on TQQQ, and as you guys can see, Meta is beginning to follow. Friendly reminder, in about 2 hours, Meta is going to be releasing their own earnings report based off of Snapchat's earnings, based off of, Twitter earnings as well. These tech companies or social media applications have not been doing well, even using the market leader in advertisement, such as Google. Google reported earnings yesterday, and even Google missed their quarterly earnings expectation. So, yeah, it's crazy. What'd you say? So Apple is grounding out. Let me go ahead and check on that. So let me pull it up. Apple. Here we go. Yep, Apple pulling back as well. Again, any stock that you want me to break down, feel free to share it in the live chat. I'd be more than happy to have it up here in the screen for you. So if enough people comment that you guys want it in the screen, I'd be more than happy to have it. There it goes. TQQQ beginning to rise. Quick little reversal. Here we go. Oh, we have quite a bit of you commenting. Oh man, let's see which one. Okay, and I'll switch it from time to time. How about that? Just so everyone gets a chance to have their stock up here. So we have Tesla and seeing how it reacts. Do you guys see how TQQQ reacts? And it's very similar to Tesla. Again, it's the understanding that TQQQ is a NASDAQ ETF. It's a triple leverage ETF. So when the NASDAQ market drops, it can bring down other markets that follow within that same niche, such as tech, right? So again, please make sure that you're aware of that. All right, I'm gonna have a quick little chip. Excuse me. All right. How much was the hike? I was actually just going to comment that. I'm actually going to pin it in the live chat just so everyone can see it. Fed rate hike is 0.75% as expected. Screw you, Justin. Here we go. All right, and again, if you guys want me to have your stock in the screen, all I literally ask you to do is drop a thumbs up, and of course, just share it in the live chat. If I see enough people sharing the same stock, I'd be more than happy to have it up here. So we have 1,700 likes. Really do appreciate you guys for those that are going out of your way and dropping a thumbs up, and especially subscribing to the channel. It really does mean a lot. I try to upload 1 or 2 of these videos every day, just trying to keep you guys up to date with something for beginners that's a little bit more difficult to make sense of, right? Here it goes. We got TQQQ beginning to rise. Tesla is following. What do we have here? Let's see what else. Chat is nuts. Yeah, it's really hard for me to see even one ticker. Let's see. So we have... Okay, let's actually put Shopify. Shopify reported earnings today. I It might have been Spotify. Was it Spotify? Yeah, it might have been Spotify. So Shopify is actually not doing too hot. Spotify, SPOT, reported earnings and beat its expectation. Spotify should be up about, I thought it was up 12%. I don't know where it's at right now. Now it's trading at 112. So, yeah. All right, let's go back to Meta. It looks like enough people want me to just keep Meta up there, especially because it's reporting earnings today. So I would be more than happy to do that. Here it goes. So this is a quick little heads up. You guys know how the moving average was acting as a support level? We have this saying within our Learn Plan Profit group. Previous support levels act as new resistance levels. So you will see that if we do not break above, this moving average is going to be acting as a resistance level for TQQQ. If there is not enough buying pressure or momentum, we could see this thing get rejected and then begin to make lower highs and lower lows, which would not be a good sign for the overall NASDAQ market or would not be a good sign for the overall tech stocks right now. Here we go. All right. We have so many people dropping things in the live chat, yet not enough people dropping a thumbs up. I'm offended. I'm offended. Should we do, I don't know if I can. Let me ask my team real quick. I was going to say maybe we should do a flag giveaway. What do you guys think? Should we give away some flags from our site? I don't know if you guys have seen any of these flags, but we have the Hustle to Inspire, Patience is Power. Should we give some of these away? I'll have to, they don't like when I do this. I get it. It's kind of difficult to manage, but okay. Okay, now you guys are liking it because now it's free. Let me make sure that I keep the Federal Reserve thing up here. All right, let me ask them real quick. All right. Asking right now. Give me one quick second. Let's see how inclined. Oh, there it goes. We got TQQQ indicating signs of an uptrend, breaking above that moving average. This is a good sign. There's a lot of buying pressure for TQQQ. All right. Oh, there it goes, getting rejected. Also, friendly reminder. I know that I have probably a handful of you guys that are completely new to the stock market. Maybe you're completely new to investing or trading. Maybe you've just thought about getting started. I want to remind you, you guys can refresh this screen. You can do it right now. And the first link in the description is our free group chat. If you have any questions, if you want to ask me for access to tomorrow's live trading session, if you want to ask me for any questions you can't find through Google, if you're an absolute beginner and you're like, hey, Ricky, what tip would you recommend for me for someone that wants to get started? I hope that you know that the best way to get a hold of me is via Discord, and that's that first link in the description. And yes, it is free for you to be able to message me. So I just want to make sure that you're aware of that, especially if you've always wanted to get started but never knew how to start. I want to make sure that, again, the only way that I can assist you is if you ask me your questions. So that's why I try to make myself as accessible as possible. So any questions you might have, again, if you want to tune on into tomorrow's live session, whatever the case might be, I'm open to ideas. If you want a big discount code for Learn Plan Profit, if you're a student, if you're a veteran, and you want a discount code, any question you might have, shoot me a message and let's make it happen. Okay. All right, here we go. So we got Tenzi asking for Ethereum. Okay, I think we could put Ethereum. I don't know if it'll let me with a split screen. Yeah, maybe it will. Oh, yeah, it does. Ethereum gapping up to 1,500. Who bought Ethereum at $700 or $800 a coin? Can I ask you guys, who did any of, I regret not buying enough. I bought a very, 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 very small amount just because I was uncertain, right? I'm so glad I did, but I mean, it's doubled. It's nearly doubled, right? not me. I did at 1100. Still a solid price point based off of where we're at right now and the potential that it has based off of previous highs. I'm not huge into crypto. Friendly reminder, if you just subscribe to my channel or if you look at the links in the description, you're going to see my Instagram. You're going to see all of our different social media platforms. One thing I want you to be aware of is there are hundreds of fake accounts of me. I will never message you asking for any crypto management or for any Forex management. I will never message you first, to put it quite frankly. I will never message you asking how your day is. I have one Instagram account. It's the third link down below, and I'm verified. That is my only Instagram account. All the other ones are fake. They're going to ask you for money. They're going to pretend that they're going to trade for you. I don't trade for anyone. I don't manage money for anyone. I don't trade Forex. I don't trade crypto. I don't even really talk about it. I just wanted to make sure that I was aware of that. As you know, if you're just subscribing to our channel, you're going to see fake accounts commenting, pretending to be me, and they're going to try to reach out. So if you can do me a favor, just report them anytime that they message you, and let's get those accounts taken down. So thank you. I thought it was weird when you asked me for OnlyFans. That is such a joke. Oh, that is that's a good one. I like that one. That was good. All right, I'm going to go back to Meta over here. Okay, so now going back on the topic of the free flags. So let's see. All right, we just activated a promo code. Let me just make sure that it's active. First off, anything that you purchase on the Shop TechBud site, that's the fourth link down below, you will automatically get entered towards our staycation giveaway. So first off, I want you guys to be aware of that, right? So we're going to be flying out 3 winners, all expenses paid, to Arizona. And we just did a free flag promo. You don't need any coupon. So anything that you buy on the site. So let's say that you want to pick up one of these shirts, right? You like the shirt. So this is one of our new Wall Street shirts. So very simple tee, Wall Street. As you guys can see, very simple, right? So let's just click add to cart. You go and I want you to select your favorite flag. So as long as you select your favorite flag, let's say that you really like the Hustle to Inspire. That's personally one of my favorites. I have my flags back here. So the Make Your Own Luck or the Crazy Duck back there, right? So I'm going to add the Hustle to Inspire. And you will see that as soon as I add it to the cart, the flag will be automatically for free. So free flag with every order. If you buy 2 items, then you can get 2 flags for free. So I'm just making you guys aware of this. Again, this is at shoptechbuds.com or the 4th link down below. So any order today, there's no minimum. It doesn't matter what you buy. You can buy something that's $10. You can buy something that, is obviously more than that. All I ask you to do is add your favorite flag to your cart and it will automatically get discounted. And you will also automatically get entered towards our staycation giveaway. So for every $1 spent on the site, it equals 5 automatic entries. So just want to make sure that you're aware of that. But again, free flag on every order, no minimum purchase, no coupon code needed. So you guys are all good there. There we go. All right, we have 10 minutes until JP begins to speak. Jerome Powell, again, is the head of the Federal Reserve. Here we go. Yep, I mean, I think there's so much going on. Will, thank you again for bringing it up. There's so much going on this week. You can't be surprised that people aren't mainly concerned about the GDP. But I appreciate the reminder. So tomorrow, 1 hour before the market opens, the GDP report is going to be released for Q2. It's obviously going to have a big impact on the overall market. There's so much going on this week. The biggest tech stocks are reporting earnings this week. We have this Fed meeting reporting earnings today, right? So it just reported its interest rate hike of 0.75%. At least that's as expected. But tomorrow, yes, The GDP will be announced 1 hour before the market opens. So just understand that that means that 1 hour before the market opens, there will be a reaction, both either bullish or bearish, depending on how it reports. And this will have an influence on the overall market. So it's good to understand that. And Will, I appreciate you just reminding us. But yeah, there's just so much going on. There's Fed meetings, interest rate hikes, huge tech stocks, biggest tech stocks, and yeah, the GDP report that's going to be released tomorrow. It's just so much. I mean, it's a lot of information for me to keep up with, right? And this is what I do all day, every day. Now I can't. This is why I've tried to. I mean, I hope that I haven't been bothering you guys, but that's why I've been uploading about 2 to 3 videos. They're about 5 minutes long on average each, just to keep you guys up to date in very simplistic ways of like, hey, don't forget about this report. Hey, don't forget about these stocks that are reporting earnings. This is what to look forward to for tomorrow as Feds are set to raise interest rates, right? So I'm just trying to do my part. There's obviously a lot of information to take in, and I just want to make sure that you guys are aware of it. So yeah. Keep uploading. I appreciate the update. Sweet. Well, I'm happy to hear. Happy to hear. There it goes. So we are making higher lows or lower highs on TQQQ. Meta is beginning to trade sideways. I think Meta is scared for its own good as it begins to report earnings. There it goes. We just had our first order for someone taking advantage of the free flag. So actually, Austin, I'm pretty sure I know you. So Austin, appreciate you. I see that you got the retro duck flag for free. So I hope you I hope you enjoy it. And if you hang it up on your trading wall or in your trading office or whatever the case might be, send me a picture. I'd love to post it on my Instagram. And just thank you again for kind of like repping some of the stuff that we make. So we really do appreciate it, guys. All right, so we have 7 minutes left until Jerome Powell begins to speak. This is your reminder. Feel free to go grab a cup of water, grab a snack. You can leave the live stream running, or you can join us after, up to you. But yeah. Yeah, don't even get me started with that, Ronnie. Yeah, I know. There's so many reports. Look at this. Look at all the reports that are set to be released. Look at all the reports that were released today, right? But today was mortgage. Tomorrow is GDP, and then we have initial claims, right? We have the EIA reports for natural gas inventories. It's just so much to take in. And then we have the PMI on Friday. This is a lot. Consumer sentiment. This is also tomorrow. I'm sorry, Friday. It's a lot of information to take in. So I just have to be selective with what videos I choose to upload and making sure that the 5 minutes that I use to upload those videos, that I express things in a very simplistic way so you guys are at least aware of them. So market is ending red. I don't know. I don't know about that one. Oh, we just had someone else take advantage of the free flag. So we have the leader flag, and this is Leo Leon. So appreciate you. Hope you enjoy that flag. And again, send me a picture of once you get it, and I'd love to post you. Thank you, Leo. Hope you enjoy the free flag. Ricky, what time is the natural gas report? Normally it's 1 hour after the market opens. Let me see. I'm sorry. Yeah, it's 1 hour after the market opens. EIA natural gas report. There it goes. All right, we just got another free flag. So we got the success flag, and that is by Kaysen Carte. So again, friendly reminder, guys, shoptechbuds.com. You guys asked for it. It's a free flag with every order. 4th link in the description of this video. If you don't see the link, refresh, and then it's the 4th link down below. Add it to your order. So if you pick up anything, if you pick up a shirt, add a free flag to your order. There's no promo code that is needed, and you automatically get the flag for free. So if you are picking up anything with your order, then you get a free flag. Just add it to your cart, and you get the flag for free. So flat till Friday. I don't know about that. I don't know if we'll be flat till Friday. think that it's, there it goes. All right, it's beginning to pick up. Views on Alphabet. Based off of their quarterly earnings, Alphabet's obviously down quite a bit on the year. I think they're down 30%. I think if your intention, I think it's all about intention right now. If your intention is to invest long term, you're getting the world's largest advertisement platform for a 30% discount. I think from bottom to top, it offers about 40% ROI. 44% as of yesterday. I don't know what it is after today. I think it could make a great long-term investment. Do I think that every quarter moving forward is going to go smooth sailing? Definitely not. I think even if I'm not mistaken, during their quarterly earnings guidance call, they announced that they will be most likely experiencing even rougher quarters in the up and coming future. So I think if you intend to invest in any company such as Amazon, Apple, Google, you need to understand what your intention is. You need to understand that things can get worse before they get better, but this is why you watch your position size. But as long as you understand that you're getting it for a good price in the grand scheme of things, then I think that's what's most important. So yeah, 2 minutes left until the meeting. And again, if it's not too much to ask, please make sure you drop a thumbs up. And I'm excited to hear the man, the myth, the legend, Jerome Powell speak. And it looks like we got a couple other people that just picked up their free flag. So if you don't mind, I want to shout you guys out. If that's okay, if you don't want me to shout you out, then, well, I'm sorry. I don't think I'll be able to keep up with the live chat. But we got Tin that just picked up a success flag for free. Let me go through this. All right, we got Zachary Hayden that just picked up a free flag. And then we got Damian Jane that just picked up, I think they picked up 2 free flags, right? Yeah. Damien got 2 free flags. I love it. But yeah, I hope you enjoy those free flags. Again, if it's not too much to ask, I'd love for you to, take a picture of your setup with it. Send it to me via Instagram. My Instagram is down below, and I'd love to post you. All right, here we go. This thing should be starting soon. 2:30 p.m. Eastern time. I'm ready. Who's ready? Let me see it. Who's ready for it? Market's gonna fall? I don't know. I don't think the market's gonna fall today. In my opinion, I think the market's gonna drop tomorrow. I think when the hype falls out, and people begin to really understand just what was factored in, a 0.75% interest rate hike is not small. So here it goes. We're going to start. So, all right. You guys ready for it? Let me get a round of applause. If you guys aren't dropping a thumbs up for me, at least do it for JP. No? Is it just me that's excited? I need to make myself a little bit smaller over here so I'm not in your way. I do apologize for that. All right. Big JP in the building. I am ready. So again, up here we got TQQQ, which is the NASDAQ ETF. Down here we have Meta, which is set to report earnings in just 1 hour and 30 minutes. There it goes. There he goes. Daddy JP in the mix. He kind of sounds like a robot, just a heads up.
Good afternoon. My colleagues and I are strongly committed to bringing inflation back down, and we're moving expeditiously to do so. We have both the tools we need and the resolve it will take to restore price stability on behalf of American families and businesses. The economy and the country have been through a lot over the past 2.5 years and have proved resilient. It is essential that we bring inflation down to our 2% goal if we are to have a sustained period of strong labor market conditions that benefit all.
Market's dropping.
From the standpoint of our congressional mandate to promote maximum employment and price stability, the current picture is plain to see. The labor market is extremely tight and inflation is much too high. Against this backdrop, today the FOMC raised its policy interest rate by 0.75 percentage point expeditiously and anticipates that ongoing increases in the target range for the federal funds rate will be appropriate to restore price stability on behalf of American families and businesses.
What's going on?
The economy and the country have been through a lot over the past 2.5 years. We are continuing the process of significantly reducing the size of our balance sheet inflation down to our 2%. I'll have more to say about today's monetary policy actions period of strong labor after briefly reviewing economic developments. From the standpoint of recent indicators of spending and production have softened. Employment and price stability, growth in consumer spending has slowed significantly, plain to see, in part reflecting lower labor market disposable income and tighter financial conditions much too high. Activity in the housing sector has weakened, in part reflecting higher mortgage rates. And after a strong increase in the first quarter, business fixed investment also looks to have declined in the second quarter. Despite these developments, the labor market has remained extremely tight, with the unemployment rate near a 50-year low, job vacancies near historical highs, and wage growth elevated. Over the past 3 months, employment rose by an average of 375,000 jobs per month, down from the average pace seen earlier in the year, but still robust.
Market's
Improvements
dropping.
in labor market conditions have been widespread, including for workers at the lower end of the wage distribution, as well as for African Americans and Hispanics. Labor demand is very strong, while labor supply remains subdued, with the labor force participation rate little changed since January. Overall, the continued strength of the labor market suggests that underlying aggregate demand remains solid. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in May, total PCE prices rose 6.3%, excluding the volatile food and energy categories. Core PCE prices rose 4.7%. In June, the 12-month change in the Consumer Price Index came in above expectations at 9.1%, and the change in the core CPI was 5.9%. Notwithstanding the recent slowdown in overall economic activity, aggregate demand appears to remain strong. Supply constraints have been larger and longer lasting than anticipated, and price pressures are evident across a broad range of goods and services. Although prices for some commodities have turned down recently, the earlier surge in prices of crude oil and other commodities that resulted from Russia's war on Ukraine has boosted prices for gasoline and food, creating additional upward pressure on inflation. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship, especially on those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks high inflation poses to both sides of our mandate, and we're strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by 0.75 percentage point, bringing the target range to 2.25% to 2.5%. And we're continuing the process of significantly reducing the size of our balance sheet, which plays an important role in firming the stance of monetary policy.
Market moving up.
Over coming months, we will be looking for compelling evidence that inflation is moving down, consistent with inflation returning to 2%. We anticipate that ongoing increases in the target range for the federal funds rate will be appropriate. The pace of those increases will continue to depend on the incoming data and evolving outlook for the economy. Today's increase in the target range is the second 75 basis point increase in as many meetings. While another unusually large increase could be appropriate at our next meeting, that is a decision that will depend on the data we get between now and then. We will continue to make our decisions meeting by meeting and communicate our thinking as clearly as possible. As the stance of monetary policy tightens further, it likely will become appropriate to slow the pace of increases while we assess how our cumulative policy adjustments are affecting the economy and inflation.
$30 a share for
Our overarching focus is using our tools to bring demand into better balance with supply in order to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Making appropriate monetary policy in this uncertain environment requires a recognition that the economy often evolves evolves in unexpected ways. Inflation has obviously surprised to the upside over the past year, and further surprises could be in store. We therefore will need to be nimble in responding to incoming data and the evolving outlook. And we will strive to avoid adding uncertainty in what is already an extraordinarily challenging and uncertain time. We are highly attentive to inflation risks and determined to take the measures necessary to return inflation to our 2% longer run goal. This process is likely to involve a period of below-trend economic growth and some softening in labor market conditions. But such outcomes are likely necessary to restore price stability and to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Hi, Chair Powell. Thanks for taking our questions. Rachel Siegel from the Washington Post. I'm wondering if you can walk us through your thinking around the decision not to go for a full percentage point increase. We saw a ramp up after the May CPI report came in hotter than usual, and then obviously the June figure did too. Was there any discussion of a stronger hike at this meeting? Thank you.
Sure. So we did judge that a 75 basis point increase was the right magnitude in light of the data and in the context of the ongoing increases in the policy rate that we've been making. I'd say that we wouldn't hesitate to make an even larger move than we did today if the committee were to conclude that were appropriate.
Whoa!
That was not the case at this meeting. There was very broad support for the move that we made. You mentioned the June meeting. We had said many times that we were prepared to move more aggressively if inflation continued to disappoint. And that's why we did move to a more aggressive pace at the June meeting, as we said we would do. At this meeting, we continued at that more aggressive pace as inflation has continued to disappoint in the form of the June CPI reading.
Thank you so much for taking our questions. Colby Smith with the Financial Times. As the committee considers the policy path forward, how will it weigh the expected decline in headline inflation, which might come as a result of the drop in commodity prices, against the fact that we are likely to see some persistence in core readings in particular?
New highs.
And given that potential tension and signs of any kind of activity weakening here, how has the committee's thinking changed on how far into restrictive territory rates might need to go?
So I guess I'd start by saying we've been saying we would move expeditiously to get to the range of neutral, and I think we've done that now. We're at 225 to 2.5, and that's right in the range of what we think is neutral. So the question is, how are we thinking about the path forward? So one thing that hasn't changed is that it won't change is that our focus is going to continue to be on using our tools to bring demand back into better balance with supply in order to bring inflation back down. That'll continue to be our overarching focus. We also said that we expect ongoing rate hikes will be appropriate and that we'll make decisions meeting by meeting. So what are we going to be looking at? We'll be looking at the incoming data, as I mentioned, and that'll start with economic activity. Are we seeing the slowdown in economic activity that we think we need? And there's some evidence that we are at this time. Of course, we'll be looking at labor market conditions, and we'll be asking whether we see the alignment between supply and demand getting better, getting closer. Of course, we'll be looking closely at inflation. You mentioned headline and core. Our mandate is for headline, of course. It's not for core, but we look at core because core is actually a better indicator of headline and of all inflation going forward. So we'll be looking at both, and we'll be looking at them for what they're saying about the outlook rather than just simply for what they say. But we'll be asking, do we see inflationary pressures declining? Do we see actual readings of inflation coming down? So in light of all that data,
profits.
the
I like
question
that.
we'll be asking
Congrats.
is whether the stance of policy we have is sufficiently restrictive to bring inflation back down to our 2% target. And it's also worth noting that these rate hikes have been large and they've come quickly, and it's likely that their full effect has not been felt by the economy. So there's probably some significant additional tightening in the pipeline. So where are we going with this? I think the committee broadly feels that we need to get policy to at least to a moderately restrictive level. And maybe the best data point for that would be what we wrote down in our SEP at the June meeting. So I think the median for the end of this year, the median would have been between 3.25 and 3.5. And then people wrote down 50 basis points higher than that for 2023. So that's, even though that's now 6 weeks old, I guess, that's the most recent reading. Of course, we'll update that reading at the September meeting in 8 weeks. So that's how we're thinking about it. As I mentioned, as it relates to September, I said that another unusually large increase could be appropriate, but that's not a decision we're making now. It's one that we'll make based on the data we see, and we're going to be making decisions meeting by meeting. We think it's time to just go to a meeting by meeting basis and not provide the kind of clear guidance that we had provided on the way to neutral.
Of the Wall Street Journal. Chair Powell, you've said that your policy works through influencing expectations and that policy needs to be at least moderately restrictive, which means you need financial conditions to stay tight. Futures market pricing currently implies you will raise rates this year along the lines of your June SEP, but then lower them a few months later next year. Are these expectations consistent with the need to keep financial conditions tight in order to moderate purchasing power and bring inflation back to 2%?
So I'm going to start by pointing out that it's very hard to say with any confidence in normal times what the economy is going to be doing in 6 or 12 months. And so to try to predict what the appropriate monetary policy response would be, I mean, of course we do that in the SEP, but nonetheless you've got to take any estimates of what rates will be next year with a grain of salt, because there's so much uncertainty. These are not normal times. There's significantly more uncertainty now about the path ahead than I think there ordinarily is, and ordinarily it's quite high. So again, I would, the best data, the only data point I have for you really is the June SEP, which I think is just the most recent thing that the committee's done. Since then, inflation has come in higher, economic activity has come in weaker than expected. But at the same time, I would say that's probably the best estimate of where the committee's thinking is still, which is that we would get to a moderately restrictive level by the end of this year, by which I mean somewhere between 3 and 3.5%, and that the committee sees further rate increases in 2023. As I mentioned, we'll update that, of course, at the September meeting, but that's really the best I can do on that.
You said inflation had been a little bit hotter than anticipated. Has your view of the terminal rate changed since June?
So I wouldn't say it was. I think we didn't expect a good reading, but this one was even worse than expected, I would say.
Yeah.
I don't talk about my own personal estimate of what the terminal rate would be. I will write down that it's going to evolve. It's obviously it has evolved over the course. I think for all participants, it has evolved over the course of the year as we learn how persistent inflation is going to be. And by the time of the September meeting, we will have seen 2 more CPI readings and 2 more labor market readings, and significant amount of readings about economic activity and perhaps geopolitical developments. Who knows? It'll be a lot. It's an 8-week intermeeting period, so I think we'll see quite a lot of data, and we'll make our decision at that meeting based on that data.
Hi, Jira. Thanks for taking our question. Gina Smile with New York Times. You kind of alluded to this earlier, but I wonder, in the event that you see several months of very weak headline inflation numbers because oil prices are coming down so much, but core inflation continues to be strong or even picks up, I wonder how you would think about that.
So it's hard to deal with hypotheticals, but I just would say this: we would look at both, and we'd be asking ourselves, are we confident that inflation is on a path down to 2%? That's really the question. And we'll be making, our policy stance will be set at a level, ultimately, at which we are confident that inflation is going to be moving down to 2%. So it would depend on a lot of things. Of course, as I mentioned, core inflation is a better predictor of inflation going forward. Headline inflation tends to be volatile. So in ordinary times, you look through volatile moves in commodities. The problem with the current situation is that if you have a sustained period of supply shocks, those can actually start to undermine or to work on de-anchoring inflation expectations. The public doesn't distinguish between core and headline inflation in their thinking. So it's something we have to take into consideration in our policymaking, even though our tools don't really work on some aspects of this, which are the supply side issues.
What he means by supply side issues
Steve
are
Eastman, CNBC.
energy and
Thanks for taking
food.
my question, Mr. Chairman. Earlier this week, the president said we are not going to be in a recession. So I have two questions off of that. Do you share the president's confidence in not being in a recession?
Oh,
And second,
that's
how
a good
would or
one.
would not a recession change policy? Is it a bright line, sir, where contraction of the economy would be a turning point in policy? Or is there some amount of contraction of the economy the committee would be willing to abide in its
Do you think that he's going to answer the question about what he thinks, or if he agrees with him, or just
Mentioned.
let's see?
We think it's necessary to have growth slow down, and growth is going to be slowing down this year for a couple of reasons. One of which is that you're coming off of the very high growth of the reopening year of 2021. You're also seeing tighter monetary policy, and you should see some slowing. We actually think we need a period of growth below potential in order to create some slack so that the supply side can catch up. We also think that there will be, in all likelihood, some softening in labor market conditions, and those are things that we expect and we think that they're probably necessary if we were to have to get inflation, if we were to be able to get inflation back down on a path to 2%, ultimately get there.
The question was whether you see a recession coming and how that might or might not change policy.
Watch out for the
We're gonna
pullback.
we're going to be focused on getting inflation back down, and we, as I've said on other occasions, price stability is really the bedrock of the economy, and nothing works in the economy without price stability. We can't have a strong labor market without price stability for an extended period of time. We all want to get back to the kind of labor market we had before the pandemic, where differences between racial and gender differences and that kind of thing were at historic minimums, where participation was high, where inflation was low. We want to get back to that, but that's not happening. That's not going to happen without restoring price stability. So that's something we see as something that we simply must do, and we think that we don't see it as a trade-off with the employment mandate. We see it as a way to facilitate the sustained achievement of the employment mandate in the longer term.
Howard Schneider with Reuters. Particularly in regard to expectations, it's been said the last few months that the risks of doing too little outweigh the risks of doing too much. Does that remain the bias?
So we're trying to do just the right amount, right? We're not trying to have a recession, and we don't think we have to. We think that there's a path for us to be able to bring inflation down while sustaining a strong labor market. As I mentioned, along with, in all likelihood, some softening in labor market conditions. So that's what we're trying to achieve, and we continue to think that there's a path to that. We know that the path has clearly narrowed, really based on events that are outside of our control, and it may narrow further. I do think, as I said just now, that restoring price stability is just something that we have to do. There isn't an option to fail to do that, because that is the thing that enables you to have a strong labor market over time. Without restoring price stability, you won't be able to, over the medium and longer term, to actually have a sustained period of very strong labor market conditions. So, of course, we serve both sides of the dual mandate, but we actually see them as well aligned on this.
As a follow-on to that, given the uncertainty and the sort of paradoxical flow of data you've been getting, if you're going to make a mistake, would you rather make the mistake on doing too much, raising too much, than raising too little?
That's a good one.
We're trying not to make a mistake. Let me put it this way. We do see that there are two-sided risks. There would be the risk of doing too much and imposing more of a downturn on the economy than was necessary. But the risk of doing too little and leaving the economy with this entrenched inflation, it only raises the cost. If you fail to deal with it in the near term, it only raises the cost of dealing with it later. To the extent people start to see it as just part of their economic lives, they start to factor high inflation into their decisions, when that, on a sustained basis, when that starts to really happen, and we don't think that's happened yet, but when that starts to happen, it just gets that much harder and the pain will be that much greater. So I really do think that it's important that we address this now and get it done.
Thanks, Chair Powell. Neil Irwin from Axios. To build a little bit on what Steve was asking, do you believe the United States is currently in a recession? Will the GDP reading tomorrow affect that judgment one way or the other? And has your assessment of the risk of recession changed any in recent weeks?
So I do not think the U.S. is currently in a recession. And the reason is there are just too many areas of the economy that are performing too well. And of course I would point to the labor market in particular. As I mentioned, it's true that growth is slowing, and for reasons that we understand. Really, the growth was extraordinarily high last year, 5.5%. We would have expected growth to slow. There's also more slowing going on now. But if you look at the labor market, you've got growth. I think payroll jobs averaging 450,000 per month. That's a remarkably strong level for this state of affairs. The unemployment rate at near a 50-year low at 3.6%. All of the wage measures that we track were running very strong. So this is a very strong labor market, and it's just not consistent with 2.7 million people hired in the first half of the year. It doesn't make sense that the economy would be in recession with this kind of thing happening. So I don't think the U.S. economy is in recession right now.
First off, that answer is good for the market.
Haven't seen it, and we'll just have to see what it says. I don't. I would say generally the GDP numbers do have a tendency to be revised pretty significantly. It's very hard. It's very hard to accumulate U.S. GDP. It's a large economy, and a lot of work and judgment goes into that. But
did we not say that before this happens? Normally, when he speaks, he doesn't really answer the question just because it's very opinionated in the way that they're asking.
Victoria Guido with Politico. I wanted to ask about the new conflict of interest rules that you all rolled out. Some senators have written asking for those rules to have more teeth and to have sort of more transparency about the Fed officials' financial activity. I was wondering if you could speak to that and whether you intend on toughening those rules in any way.
so those are the toughest rules in place, at any comparable institution that I'm aware of. We think, we thought about this carefully, and we put them in place, and we're building the infrastructure so that the enforcement will be tight. That actually you won't be able to make trades unless they're pre-cleared, and the amount of trades you make will be they'll have to be 45 days or more before any FOMC meeting. It's just I think we've really created a very strong and robust set of rules that will support public trust in the institution, and again, we're just now, the system is just now up and running, and I'm proud of what we did.
Hi, Katerina Saraiva, Bloomberg News. I wanted to ask a little bit more about the 75 basis points versus 50 versus 25. Can you talk a little bit about what kind of goes into your thinking for making the decision on how much to raise rates, and just talking about a very large amount that you alluded to, could that possibly be 100 basis points? And then kind of along those lines, is there any sort of weakness in the economy outside of inflation measures that would lead you to slow your hiking pace?
So I'm gonna take that as a question about the next meeting and thereafter. So as I mentioned, we're going to be looking at all of those things: activity, labor market, inflation, and we're going to be thinking about our policy stance and where does it really need to be. And I also mentioned that as this process, now that we're at neutral, as the process goes on, at some point, it will be appropriate to slow down. And we haven't made a decision when that point is, but intuitively that makes sense, right? We've been front-end loading these very large rate increases, and now we're getting closer to where we need to be. So that's how we're thinking about it. And in terms of September, we're gonna watch the data and the evolving outlook very carefully, and factor in everything and make a decision in September about what to do. And I'm not really going to provide any specific guidance about what that might be. But I mentioned that we might do another unusually large rate increase, but that's not a decision that we've made at all. So
Wow.
we are, we're going to be guided by the data. I think you can still think of the destination as broadly in line with the June SEP, because it's only 6 weeks old, and sometimes SEPs can get old really quick. I think in this one I would say is probably the best guide we have as to where the committee thinks it needs to get at the end of the year and then into next year. So I would point you to that.
Hi, thank you. Chris Rugaber, Associated Press. I wanted to ask about, right now there is a sort of growing gap between the Fed's preferred measure of inflation, the PCE index, and the one that's followed by the public, the CPI, of course. How do you expect to handle this divergence if the PCE starts to come down enough for you to consider slowing rate hikes, even if the public is still seeing much higher CPI ratings? Thank you.
So it's an interesting situation. Of course, we've long used PCE because we think it's just better at capturing the inflation that people actually face in their lives. And I think that view is pretty widely understood. That said, the public really reads about CPI. And the difference really is because the CPI has higher weights on things like food, gasoline, motor vehicles, and housing than the PCE index does. And so that accounts for a lot of the difference. However, over time, they tend to come together. We were given the importance in the public eye of CPI, we are calling it out and noticing it and everything like that. But remember, we do target PCE. That is because we think it's a better measure. They will come together eventually. The typical gap was really about 25 basis points for a very long time. And if it got to 40 basis points, that would be very noticeable. Now it's much larger than that because of the things I mentioned. So we'll be watching both, but again, the one that we think is the best measure always has been PCE, at least since I think we, some 20 plus years ago, moved to PCE.
Watch for the little pullback. There's
I'd
no
like to
break
read
of pattern.
A couple of things together. Michael McKee from Bloomberg
Excuse me.
TV and Radio. You said that the destination pretty much remains the same in terms of your end of the year target, but where are you in the journey? We've now seen the federal stimulus programs end. You mentioned consumer spending, business investment have slowed. Are they moving at a pace you would expect, or is demand still greater than supply, too much greater than supply, that you need to do significantly more? And I ask because there are lags in the impact of monetary policy, as you mentioned, and a lot of this might hit in 2023. The strong dollar effect may hit in 2023 when the economy might be weak. How do you know where you are and where you think you need to get to?
Well, just talking about demand for a second, as I mentioned in my remarks, I think you pretty clearly do see a slowing now in demand in the second quarter.
Yeah, for sure.
Consumer spending, business fixed investment, housing, places like that. I think people widely looked at the first quarter numbers and thought they didn't make sense and might have been misleading in terms of the overall direction of the economy. Not true of the second quarter, but at the same time, you have this labor market. So there are plenty of experiences where GDP has been reported as weak and the labor market is strong and the economy has gone right through that and been fine. So that's happened many times. And it used to happen, if you remember, in the first quarter of every year for several years in a row, GDP was negative and the labor market was moving along just fine, and it turned out to just be measurement error. It was called residual seasonality. We don't know the situation. The truth is that we think that demand is moderating. We do. How much is it moderating? We're not sure. We're going to have to watch the data carefully. There is a great deal of money on people's balance sheets that they can spend. The unemployment rate is very low. The labor market's very hot. There are many, many job openings. Wages are high. So it's the kind of thing where you think that the economy should actually be doing pretty well in the second half of the year. But we'll have to see. We don't know that because you do see a marked slowing in the second quarter. That is fairly broad. So we'll be watching that. We'll be watching that. Of course, as I mentioned, we do want to see demand running below potential for a sustained period to create slack and give inflation a chance to come down.
Watch for the pullback right here for the NASDAQ market. Watch for the break
Thank you,
below
Chairman.
3030.
Nicole Dupine, CNN Business. When does the committee expect to see a meaningful slowdown in the labor market, and how much weakness will it accept with regard to slower job growth and higher unemployment before it pauses or begins to think about cutting rates?
So I think you're already seeing, you've seen in the labor market, what you've seen is a decline from very high levels of job creation last year and earlier this year to modestly slower job creation. Still quite robust, as I mentioned. So you're seeing that. You're seeing some increase in initial claims on insurance, although that may actually have to do with seasonal adjustments. We're not sure that that's actually real. There's some evidence that wages, if you look at average hourly earnings, they appear to be moderating.
Quick market update. How are you guys feeling about the market right now? Let me know in the live chat.
Friday, I guess. And that's a very important one because it adjusts for composition. So I'd say you and also anecdotally, you hear much, the sort of level of concern on the part of businesses that they simply can't find workers is probably down a little bit from what it was, say, for example, late in the latter parts of last year. So there's a feeling that the labor market is moving back into balance. If you look at job openings or quits, you see them moving sideways or perhaps a little bit down. But it's only the beginning of an adjustment. But I think most also, if you look at, once you start citing these things, you can't stop. If you look at the household survey, you see much lower job creation, and the household survey can be quite volatile, but it has no jobs created in the last 3 months. So that might be a signal that job creation is actually a little bit slower than we're seeing in the establishment survey. So, executive summary, I would say there's some evidence that labor demand may be slowing a bit. Labor supply, not so much. We have been disappointed that labor force participation really hasn't moved up since January. That may be related to yet another big wave of COVID, and that there's evidence that that's the case. But so we're not seeing much in the way of labor supply. Nonetheless, I would say some progress on demand and supply getting back in alignment.
Before you think about pausing.
So I think we're going to be looking at inflation as well. We as I mentioned, we need to see inflation coming down.
Watch for new highs.
We need to be confident that
There
inflation is going to get back down to mandate consistent levels. That's not something we can avoid doing. That really needs to happen. And we do think, though, that the labor market can adjust because of the huge overhang of job openings, of excess demand, really. There should be able to be an adjustment that would have perhaps lower than expected increases in unemployment, lower than would be expected in the ordinary course of events, because the ratio of vacancies to unemployed is just out of keeping with historical experience, and that suggests that this time could be different.
Thanks, Mr. Chairman. Edward Lawrence from Fox Business. So you said the path may be narrowed to avoiding a recession. So how close are we to a recession? And then how to forecast the possible recessions from banks and economists? How does that make a soft landing you've talked about more difficult?
So as I mentioned, it doesn't seem that the U.S. economy is in recession right now. And I think you do see weakening, some slowdown, let's put it that way, in growth, and you see it across some of the categories that I mentioned, but there's also just the very strong data coming out of the labor market still. So overall, you would say that in all probability, demand is still strong, and the economy is still on track to continue to grow this year. But the slowdown in the second quarter is notable, and we're going to be watching that carefully. Sorry, what was the
Forecasts, how did the bank forecast the possible recessions economies? Does that affect the soft landing?
Well, we've said since the beginning, I think, that having a soft landing is what we're aiming for. Of course, that has to be our goal. It is our goal, and we'll keep trying to achieve it. I do think events. At the beginning, we said it was not going to be easy. It was going to be quite challenging to do that. It's unusual. It's an unusual event. It's not a typical event, given where we are. If there is a path to it, and we think there is, it is the one I mentioned, that the labor market actually has such a large amount of surplus demand that you could see that demand coming down in a way that didn't translate into a big increase in unemployment, as you would expect in the ordinary course, because frankly the imbalance is so much greater. But we don't know that. I mean, this is a case of first impression. So anyone who was really sure that it's impossible or really sure that it will happen is probably underestimating the level of uncertainty. And so I would certainly say it's an uncertain thing. Nonetheless, it's our goal to achieve it, and we'll keep trying to do that.
Thank you, Mr. Chairman. Jean Young with Market News. I wanted to ask about the balance sheet reduction program. It's been...
Alrighty, guys. Well, I wanted to wrap up this live session. It looks like they're now asking, I would say, less interesting questions, and JP does a really good job kind of beating around the bush. Nonetheless, I think that I think he did a great job answering a very important question in this conference. And the main one, in my opinion, was, would you consider taking a more aggressive approach than the 75 basis points? And he said yes. One thing that you guys must be aware, in the month of August, they do not plan to have a Fed FOMC meeting. They plan to host one in September. And by that time, again, by already missing a meeting, it wouldn't be much of a surprise that if they need to take a more aggressive approach, that they will take on inflation head on, right? I know a lot of you guys, I can see by the live chat that a lot of people get upset with the way that he avoids questions. You just have to understand some of the questions that they choose to ask him. He can't be sharing his opinion on if he agrees or disagrees personally on specific topics. I get that it's frustrating. It's just not his job to say anything that the market can react to that can cause more harm than good. So you just have to be aware that he needs to be very selective with what it is and how it is that he chooses to answer his questions. I get it. It's frustrating. It's just, I guess, the position that he's in, because he knows the amount of influence that he has to the overall market. I hope that you guys enjoyed this live session. I hope it's not too much to ask to drop a thumbs up. Friendly reminder, Meta is going to be reporting earnings today after the market closes. So in about 51 minutes, Meta, which is also previously known as Facebook, reports earnings based off of previous earnings such as Google and Snapchat. In my opinion, I don't expect the earnings to be any good. One of the things that I do want to talk about is tomorrow, not only is there Amazon and Apple that are reporting earnings after market hours, but there is also a GDP report that is set to be released based off of Q2, and that is 1 hour before the market opens. I don't know if I'm going to upload another video today. I will try to, and in that video, I can talk a little bit more about that if you have specific questions. If you have any specific questions that you want to ask me about today's live session, all I literally ask you to do is message me via Discord, and that's that first link in the description of this video. If you have any questions whatsoever about getting started, you're an absolute beginner, what trading platform do I use? All the links are first off down below. My trading platform that I use is Webull, and it's the 6th link in the description. If you don't see it, feel free to refresh your screen. But one thing, the last thing that I really want to talk about, look at every previous FOMC meeting. Anytime that the market reacts in a positive way the day of, it crashes the day after. Now, I'm not saying that it's going to crash tomorrow. I'm just saying that the month of June, the month of May, every single month, it reports earnings like this, or it reports there's an FOMC meeting. The day after, we tend to see a very significant pullback as things begin to get factored into the market. Please, just take time and be aware. You don't have to do anything. I just want you to mentally prepare and not get too excited today and then get devastated tomorrow. I hope that the market only continues to rally. It would be a step in the right direction. It looks like the market's trying to show stronger signs of a support, but we all know that if the past 7 months have taught us anything with the market selling off, stocks can always get cheaper. So please, I just wanted to make sure that not only did we cover this, but we also talk about expectations based off of previous FOMC meetings, and that I at least make you aware of this before the market closes and or before tomorrow if it ends up being a red day. I'm very excited to follow up. Again, I would love for you to watch me during our live trading session tomorrow. I trade live every single morning, and I would love for you to join me. So if you've ever wanted to see what it's like for me to trade live in the stock market, I encourage you to take 2 minutes, click the second link down below, learn a little bit more about our Learn Plan Profit Group, what's included, and we are running one of our biggest discounts. If you've been waiting for a big discount, it's $100 off LPP 2.0. It's all-inclusive, one-time payment, lifetime access, and right now it's $100 off, and that's that second link down below. And the last thing that I do want to remind you is, again, you guys asked for a free flag. So select your favorite items from the Shop TechBud site and add your favorite flag to your order, and you'll automatically get it for free at checkout. There's already been about 10 of you that have collected your free flag. Some of you guys bought a t-shirt, some of you guys bought a flag and then added just another flag and got it for free. But again, this will be active until the end of today. You need no promo code. It's shoptechbuds.com or the fourth link down below. I will not be live for the Meta earnings. I need to take a little bit of a break. I go live every morning at 6:30 and it is 12:13 right now. I've been in front of my screen, in front of my lights all morning and all day, at least for today, and I want to take a little bit of a break. So I'm going to go grab some food. I'm going to chill out for a little bit, and if there's anything anything significant happens after Meta's earnings, then I will make another video and I will keep you guys up to date on how I made sense of their earnings. So I hope that I earned your thumbs up. I really do appreciate you guys spending time with me here today. I hope that you can consider subscribing. I upload new videos every single day about the stock market and love to be of assistance to you. Like always, let's make sure that we end the year on a green note.